Joining me now is Capstick from Nedbank Private Wealth to give us his take on markets activity. Brendan, thanks so much for your time this afternoon. So it seems like investors are taking a wait-and-see approach as the US-China trade talks continue in London. That aside, traders also awaiting inflation numbers out of the US. What are your expectations on that front? Do you expect to start seeing the impact of those tariffs filtering through to consumer prices? It was also interesting to see that a number of Americans are more positive about inflation, according to a report by the New York Fed, noting that the outlook for consumer prices has eased. Where are you at with expectations for inflation in the US?
Yeah, good afternoon. Thanks for having me. As you mentioned, I think markets are definitely in a bit of a holding pattern this week on the US-China talks in London. I think, on your tariff question, I think it's quite difficult to see just coming out of the earnings season. A lot of those, effects have not been felt. I think the one thing that we all can see in the market is uncertainty is still there. I think the China-US discussion at this point, we are in that 90-day pause period, but I think it's important that this gets resolved quite quickly because it will be inflationary. Just talking about the rare earth withheld, or they're not exporting, the Chinese are not exporting the rare earth, that affects the battery pricing in the US as well as defense. And we've seen those shares come off, as you mentioned. So I think that is definitely also inflationary from that point of view. And of course, other way, the US as well is withholding export of semiconductor chips to China. And all these effects are inflationary because investors are not investing and companies are also withholding capex, which is not good for pricing. So we'll see the US inflation numbers out tomorrow. The market is still mixed if we will see a recession out of the US this year. But I think the uncertainty is not good for those inflation numbers.
And sticking with the conversation around tariffs as we see those talks ongoing in London, we also got data out from China, trade data late yesterday, showing that exports from China to the US clocked their biggest decline in 5 years, down 34%. Overall exports increased, however, but at a slower pace. Are we seeing the impact of those tariffs there? I mean, in March and April, we did see a lot of companies front-loading, and I think that's really starting to dissipate now.
100%, good points. I mean, I think that front-loading effect really did, with a front-running perspective from a company's point of view, with uncertainty of what the trade deal will look like. That is definitely a weak print, at 34% down. So on that front, it still seems that the Chinese consumer is in a bit of trouble and under pressure, and that will put pressure on their local government to reduce rates or stimulate their market. In saying that, I mean, what does it mean for us? I think we've seen a strong rebound in commodities, specifically PGMs locally.
Yes.
PGM prices have been doing exceptionally well. That market is still in deficit, around 1 million ounces per year, and we've seen our PGM shares really, really hard. But on that front, Chinese market broadly still under pressure.
Let's take a look at some company news out today, starting off with Telkom. Shareholders in that company really smiling all the way to the bank. The group reinstated its dividend after 4 years, and they've declared a special dividend. This comes alongside its earnings report, where earnings saw a double-digit increase. Markets seem to be, welcoming the news. That share price up 5.5%. Your analysis on that report, Brendan?
Yeah, it just shows you good management can really turn the corner. I mean, the good decisions from management team of the last, and it's not only this reporting period, but the previous 6 months as well. Shares up nearly 70% over the last year. HEPS up 62%, strong EBITDA margin around the group, around 26%. Free cash are now up at 2.8 billion rands, and not trading at a demanding forward multiple around 7. So I'm not surprised to see the market liking this. Maybe just drilling down to some of the segments. The mobile segment really strong, up 19.5%. Users up post 15.2 million users, and OpenServe fiber to the house penetration really strong. 34% margin on that business. So Telkom doing a lot of strong things. You mentioned the disposal of SwiftNet, 6.6 billion rands of proceeds, and that's degearing their balance sheet. And of course, we've seen a special dividend coming through. So a lot of positives to take from Telkom's update.
Another company out with good results was Premier. There we are seeing the company weathering those tough economic challenges. We saw earnings coming 28% higher. Revenue, however, the growth there is in the single digits. What did you make of the performance and the difference we are seeing between the top and the bottom line?
100%. I think the revenue growth just reflects where they play. I mean, the margin expansion was marginal but positive. So it's difficult for them to eke out that increasing revenue growth through their volume base. It just comes some positives on this company. Since they listed, been one of the best performers really locally. So, well done to the management team for managing cost. That global wheat pricing also coming down, so input prices coming down. Very strong brands through the Blue Star and Snowflake brand, as you mentioned, but is a difficult environment to grow. All in all, food producers have done exceptionally well, coming from a low base. We still like that space. It's not expensive, but again, it's a forward multiple of around 13 times on Premier. So the company's not expensive, but again, as you mentioned, hard environment to grow in as well.
Cap, in the meantime, doesn't seem to be doing well under these tough conditions, Brendan, pointing to the delay in the tabling of the budget as well as the potential impact those US tariffs could have on future earnings. And so they've said in the 11 months to end May that they faced challenges with revenue growth quite muted. Just your take on that update?
Yeah, it's not one we'd actually look too closely, but again, maybe just highlighting what I've just mentioned. The broader market, I think CapEx was hard to come by to invest into this environment. I think these uncertainty with tariffs does play into a smaller company like Cap at this point. So not something we are too close to at this point.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
Devices have been doing it for years. Things like machines to help your heart going along and stuff like that. However, first of all, shall I say, long distance surgery, where they employ AI to help your surgeon while he is working via video link, and the other one is Cetera, which is basically an AI-driven research engine where you would normally use animals for testing. You're now using AI to help with your testing. I think it's two huge growth areas. The company has got a terrific dividend growth record of more than 40 years.
So, I mean, I was also scratching around locally and struggling to find anything. So I decided to go for the company that owns almost everything, and that is Bidvest. I think as we mentioned around the retail stocks as well, it does feel as if the consumer environment is continuing to improve. And I think that Bidvest will be a beneficiary in their consumer business. I'm excited about the motor retail side of that business and most other businesses at this point in time who are exposed to it. So I think they could see a really nice uplift in their automotive business. And yeah, I mean, it's well diversified. It doesn't look expensive at all. The CEO bought 10 million rands worth of shares towards the end of last week. Oh, yeah. So who am I to disagree with her?
So Chantal going with Bidvest and Rick is picking Medtronic. Your take on those counters?
Yeah, let's start with Medtronic. I'm not close to the company. I did have a look at it. Not trading in a demanding multiple around 16 times forward. Plays in a technology healthcare solution space, pacemakers and similar technology devices. I think with the aging population globally in developed markets, really a defensive place to invest in. So it does look interesting. We prefer, we don't hold this client, but we would prefer Striker Corp in similar segment that we would hold for clients. That's on Bidvest. Chantal's call. I think I was looking at it and very, very close to picking that as well, my stock pick. But I think, yes, we agree there's an improving local environment. Bidvest is very diversified business with a mix of annuities across the board. We've seen their motor and fleet business improving, not trading in a demanding multiple of around 12 times forward, down 5% on a year-to-date basis. And considering the market's up around 14, I think there is value to be had with Bidvest.
All right, let's get into your stock pick. Where are you hanging your hat today?
Yeah, so retail space, Foschini Group, I've picked it before. Shares still down 21% on a year-to-date basis. They were out with results last week, a decent set of results. The whole sector, really looking still solid. It hasn't reacted because there was news, of course, on aggressive store rollouts in the last couple of days, and the shares have sold down. I think Foschini Group really positioned in that space to benefit from those store rollouts. On that front, not trading at a demanding multiple, and we've seen expansion in their online platform, Bash, being profitable 2 years in advance, as well as their jet business with a strong EBIT increase around 38%. So, yeah, really strong SA Inc. Like stock that we can invest in. I think it's a good one to look at this price.
All right, TFG, one to keep your eye on. Brendan, thanks so much for your time and sharing your insights with us this afternoon. That was Brendan Capstick from Nedbank Private Wealth.